All right, we're here with Caden. I'll give some context for the listeners and people interested in potentially investing in fuel cell energy. Long story short is I've been looking for the next Bloom Energy for a couple of months and very, very intensively over the last month. And yesterday, a subscriber on X sent me your post on X, and I read it and I was like, holy shit. Holy shit, this is what I was looking for. So the context is, while I was looking at alternatives to Bloom, basically I realized how much bigger this opportunity is to provide fuel cells to data centers than I thought. And I also realized how there really is no alternative to Bloom. And when I asked people for an alternative to Bloom, a couple of people obviously mentioned fuel cell, ticker Fcel. But when I looked them up, basically I saw zero data center deals. I saw zero proof that they have real life demand. And this was very confusing to me because obviously every solution, we all know that like the gas turbines are sold out until 2030. So to me, my simple mindset is every solution that is viable for data centers will be bought out. And then yesterday, somebody sent me your post, and long story short, they're now getting, it looks like they're getting a real deal, and that's freaking exciting.
It is. Yeah, fuel cell yesterday, there was a government filing actually hidden about a week ago in the Fairfax County government website. And that T5 had submitted this filing, and it's a 60 megawatt fuel cell yard with a total of 76 megawatts of power in this data center. I had speculated over a week ago that I thought it could be fuel cell. T5 actually has a partnership with Brookfield, who had a partnership with Bloom, and so I eventually was like, maybe it's not, it could just be Bloom. Next thing you know, we go deeper into the filing, they lay out some corrected plans, and they're citing Fuel Cell Energy's investor materials, their Trinity site megawatt deployment, all in the filing, right? And so they're all but confirming that they're going to be using Fuel Cell Energy for their fuel cells at this Fairfax site, which is their first ever data center site, Fuel Cell's first ever data center site. And it's an incredible validation point. T5 Data Centers is one of the largest data center operators in the world, and they've already deployed and operate over 4 gigawatts of data centers. So this stamp of approval is company defining.
So I've never heard of T5, to be honest. They have the 4 gigawatts, they have deployed that much capacity.
Yes, they're operating 4 gigawatts of data center capacity.
Okay, so I'm going to be super annoying. I want to verify every single step here because obviously people who look at the stock action of Fuel Cell Energy will be very skeptical. So I want to be insanely nitpicky in this podcast and just go through. The dog is loving it. We're going to go through. Wait,
she might be better off. She might be better off in that other. Than the
Wait,
crate,
make a quick stop.
honestly.
Okay, let's resume where we left off. So basically, T5, they have deployed 4 gigawatts of capacity. So they're totally legit. They're a real life data center. What are they, like an operator, or like what exactly do they do?
They're a data center operator, and so they are already managing 3 to 4 gigawatts of capacity, of data center capacity. They have 22 data centers that they've developed. So this we're talking about one of the biggest data center developers in the world, putting a stamp of approval on a company that previously had not done anything with data centers, but obviously has a pipeline, as we know. Okay,
so just for context, Nebius currently plans to get to 4 gigawatts, and this company is already there today. So Nebius is a $40 billion company. So this is, okay, so number one, this is a huge player, and it seems like they picked fuel cell. Okay. What was the source? You said it was a government website. Can you describe that exactly?
Yeah, so it's the Fairfax County government website where they go in and they send in the filings, all the different attachments they need to get approval for this data center. And so when you dig deep into their filings, you can see their proposed site layout, their letter to the actual county. You see they discuss fuel cells in detail, convincing the county that fuel cells. Fairfax is clearly one of the biggest emphasis is on community acceptance, right? And so your best way to get time to power and community acceptance is through fuel cells. low emissions, low water usage, very low noise. It's about the same sound as you and me talking in a quiet office. That's what those fuel cells sound like from 30 feet. So they're incredibly quiet versus a nat gas turbine, which is incredibly loud.
Yeah. So for context, for example, in the Nebius Vineland data center that was built by Data One for Nebius, people complained about very, very loud noises from the gas turbines. So they said it was like obnoxious and crazy. So for people that think it's hard to imagine, like the noise is an actual problem for people that live near those data centers. And it really doesn't matter whether we care about it. This directly affects how quickly you can deploy. So it's for, if you want to deploy data centers and you want to spend billions on them, if you don't get the permits and you get social pushback, which is a huge challenge, you're kind of screwed.
Yep.
So this matters. Okay.
You won't be able to get the data center off the ground flat out.
It can kill the project.
It'll kill your entire project, right?
Yeah. Okay. So next question: who uploaded the documents? I know I'm being silly here, but like, if I understand it correctly, it was a lawyer representing T5.
It is correct. So the letter is a lawyer representing T5. It's unclear who uploaded the rest of the documents, but it is somebody on the T5/legal, either the legal team or the T5 team, uploading these documents for the approval of the Fairfax County site. And what I will note is that they have been working with the Fairfax County since at least February. So when you look at the actual site plans, there's two. There's one original and one corrected. The first one's dated in February, the next one's dated in March. So what that means is likely they went from, we're working with Fairfax, we're discussing plans, we're making sure there's no red tape, there's no deal breakers, right? In February, they amended that document in March. So Fairfax gave them feedback, they amended that document in March, right? And they made some changes, whatever that may be. So what that implies is they've been working with Fairfax County for at least 3 months. And so they have a kickstart on what that timeline should look like, which still is a bit unclear. I've had a follower recently reach out and tell me that the zoning approval comes within 30 days of filing, which would mean we'd get an approval for zoning within early June, which would be unbelievable. But that's the picture of what that filing looked like, who sent it in, and what's in those filings.
Okay, gotcha. And yesterday, when I shared your post, but only with subscribers, and then I told them, verify for yourself. I haven't checked it yet, if it's true or not. And a couple people were like, oh, I put it into Gemini, I put it in ChatGPT, it's not yet confirmed, it might be Bloom. No, I just want to say, no. In the filing, you can literally go to attachment and you see not just the machines, you see the freaking logo of Fuel Cell. It's 100% Fuel Cell. This is confirmed.
They put not only their logo of like their so they created, the reason why I figured this out is because I've looked at all of their investor presentations for quarters on end. And somebody sends me a photo of this slide and I go, where are you finding this? What investor presentation is this from? I don't recognize this slide. Yeah. It's a little crazy of me that I can remember these slides, but I remember because I've been really on top of this company. I really believed in this story. And next thing you know, it's in a government filing. So they created this slide for this filing, which is showing they've previously gotten air permit permissions in Connecticut. And they're also citing in the filing, they're showing one of Fuel Cell's current deployments in their Trinity. Like, it is just clear as day. People aren't reading. It's kind of frustrating. I have people in my comments being like, it's Bloom Energy, the specs don't match. I'm like, the specs actually match perfectly.
It's literally them. It's literally them.
They match perfectly because that's how I speculated this from the beginning. The specs matched perfectly.
People are so skeptical. I also compared yesterday. People are so skeptical now in the age of AI slop. I understand.
It's insane.
People are so skeptical now that you can literally, like, the filing literally shows their logo. Like, nah, it's Bloom. But okay,
it's crazy with AI. Like, you should use it in your workflows. I'll make it quick. You should use it in your workflows, but you can't rely on it, right? And it's just unbelievable. Read for yourself. I beg of you guys, just for a few minutes. It's out there.
Just verify the
so
actual company. Okay,
right? Exactly.
Okay, so this is maybe a bit of a weird start, but I think it's important for viewers to understand, okay, this is why literally this company now appears on the fuel cell provider list. Like, this is now one of 2 companies that is a public US listed provider of fuel cells that now has a confirmed, at least one or of course more, probably more orders from data centers. There's 2 companies. One of them is Bloom Energy, an $80 billion company, and the other one is Fcel Energy, Fcel, a $1 billion company. So Bloom is 80 times bigger. Now I think it's good at this point to now people get why we're interested. Now I think maybe we zoom out a little bit, just really quick. Why, like, it might be weird for you to understand, like, why Arcade and I, why are we so freaking excited? Like, okay, chill guys, it's 60 megawatts, it's not that big of a deal. So I think what's worth mentioning here is that OpenAI alone, until 2030, they want to deploy they want to get to 100 gigawatts of capacity. Let's do a simplification here, just assume all the hyperscalers and all the frontier labs together. Let's say they want to get to 500 gigawatts. And I personally would assume that 80% of that will be for inference. So I think we're looking at 400 gigawatts for inference. And now, I don't know, what would you guess? Like, how much of that can actually be supplied by the grid?
I think there's such a grid backlog that almost, and also the regulatory concerns around on using the grid, that I believe you're going to see on-site power generation mandated for most data centers in the United States.
Hasn't Trump already passed a similar law to that? Like a couple of days and weeks ago, there were many government pushes towards bring your own power. Have you looked into the exact details there?
I'm not in the exact details, but bring your own power is the name of the game, and it will be the name of the game for the next 5 years at the very minimum. Okay. If you want to get a data center online, you need to get to bring your own power. It's that simple. You cannot just use the grid for your power.
So if we assume we need an additional 400 gigawatts, again, for people to compare this, 1 gigawatt is roughly 1 nuclear power plant. So we're looking at, in the next 3.5 years, 400 nuclear power plants of power for data centers. I mean, this is fucking mind-blowing. This is unheard of. The only country in the world that kind of understands these dimensions is probably China with solar, but that's a different story. We're not there yet. So how much would we estimate of that will be coming from bring your own power solutions? Maybe half of it?
I'd say at least half, right?
Okay, let's say half. So we're now at 200 gigawatts for inference over the next 3.5 years. Now, if we go through the solutions, okay, again, this is for inference. This is not for training. This is not just for inference. And for inference, like proximity to your end user is quite important. I think, Caden, are you pro or anti-nuclear in general?
I'm pro-nuclear for sure. Okay. I think there's a lot of very promising developments in nuclear, but we're very far away.
Yeah, me too. We're both pro-nuclear. Would you want to live close to a nuclear power plant?
I wouldn't.
This is the problem with nuclear. Everybody that is pro-nuclear, us included, does like nuclear is one of those things. It's great, but not in my backyard, right? So this is an issue. And now, if you look at, and again, Nebulous followers will be very on top of how big of an issue this is in Vineland with the data center. If you look at the pushback data centers are getting for fake reasons like water usage, which is basically zero, it's a giant meme on X right now, but it still creates so much pushback. And now the gas turbines and the emissions. Now imagine the pushback if somebody wants to make a freaking nuclear power plant, even if it's a small one from, let's say, Oklo or SMR or whatever. Like, you don't want that in your neighborhood. So I think nuclear, because inference data centers have to be as close as possible to the end users, I think nuclear is honestly not as good of a solution as people might think, even if it's from a physics point of view makes sense. So the next option would of course be gas turbines. Next problem, sold out until 2030. And
I think it's 2032 at this point.
Yeah, so they're sold out. They are very popular because they're on a price per megawatt. They're, I think, the most efficient, if I understand it correctly. But the problem is they're fucking dirty. You're literally burning gas. So it's very bad, and you need air permits. And the air permits can often lead to delays of 6 to 18 months. And again, getting the air permits is a big problem, especially when you're close to people. If you're doing it somewhere in Texas, I'm sure people don't really give a shit. But if you're doing it in an industrial data center close to a lot of people do care. And again, what you mentioned as well, the noise. So
Yep.
That's a problem. And we saw with Nebius, now they had to switch from that. They just switched from gas turbines to fuel cells from Bloom. And they probably paid a fucking fortune. Like it's like 2.8 billion or something over 10 years. Product plus services, 2.7 billion. That's a shit ton of money, but that's how much it's valuable. Okay, so next solution would be solar and wind, basically renewables, plus batteries. What's your take on that?
It's possibly a solid option, but I don't find it to be nearly as competitive or as compelling as fuel cells or even nat gas turbines, honestly. I think, again, we'll talk about fuel cell in a minute, but fuel cells also get paired with battery energy storage systems. So I do believe that we don't have the same solar technology and also the scale of China. And so it's not as viable of an option. Our whole solar ecosystem is underdeveloped, and it takes many, many years to develop that ecosystem to support the scale of the data center deployments we're going to see over the next 3 to 5 years.
I think there's probably a lot of money to be made in the best names like EOS, Fluency, T1, all of names, like all of them have gotten a lot of hype on X. And I think all of them have their place, and the reality is we probably need as much as we can. But these will bring on this will help us with a few gigawatts, right? And the second thing is, I don't think they're as reliable if you need 24/7 stable energy. In some places you don't have wind. In some places you don't have enough sun. And my understanding,
throw wind out of the window. Throw wind out of the window. Wind's not even a viable option for data centers. We could throw that one out.
Trump hates wind anyways for whatever reason, and he hates solar, which I would be very pro solar. But anyways, he is who he is, and he hates it. So yeah. Anyways, the other problem is that of course you need way more land. Right? You need way more space. I mean, let's ignore wind, but I think there's a lot of smart people who are like massive supporters of solar, including Elon. But if you have like a tight space, like how are you going to power it with solar? So basically we're left with like 100, 150.
I think it's a small fraction in terms of megawatts per acre with solar that you're getting from fuel cells, like a small fraction.
Yeah,
fuel cells are that much more efficient in space, right? It's unbelievable.
Yeah. So I think we can agree that all of these things have their place when it comes to taking pressure from the grid. The grid itself, of course, should be expanded. Nuclear power plants have their place for training and maybe also for inference in some places. But overall, it seems like the best solution is fuel cells. If you look at the stock price of Bloom Energy, the market seems to go fucking crazy for it. The stock is up like 1,400% in 1 year because people are paying it forward massively because people that research this understand, oh shit, this is where we're going. And we also see this recently kind of verified with Oracle switching in a big data center for
in Arizona.
5 gigawatts. How much was it?
I think it was their Arizona data center. They switched from nat gas turbines to Bloom Energy's fuel cells. I think it was 1.4 gigawatts in that specific site. But I could be.
How long ago was that? Like
less than 4 weeks ago.
Okay, so 1 month ago we see Oracle switching from nat gas turbines to fuel cells. Now we just saw Nebius yesterday. Was it yesterday? 1 or 2 days ago. Oh, it was yesterday. Yeah, I don't sleep enough.
It was in the morning.
Okay. Yeah, but basically yesterday Nebius announces, and a lot of people in the Nebius community have correctly guessed this for a while before it happened, that they will also switch from natural gas to fuel cells. So this trend here, it makes sense logically, and we see it now verified, but I don't think the market has fully understood it. And also what you have to understand, I mean, you do obviously better than me, but I think the audience is that how much capacity does Bloom currently have? Like 1 gigawatt? I think their goal is to get to 2 gigawatts.
2 gigawatts by next year is their capacity goal.
Okay, so this entire rundown, the point here is, I think every fuel cell solution that is viable will be completely sold out. Because the disconnect between those 200 gigawatts plus of capacity that we need and the 3, 4, 5 gigawatts that we have, I mean, this is the definition of a crazy demand-supply mismatch. And this leads me to believe that fuel cell providers can expect prepayments and insane growth, and every bit of product they create will be sold, and obviously expanding margins. And so now this brings us back to fuel cell. And so can you maybe explain to people, can you share some of the numbers, like why this could be a game changer for fuel cells stock price? Because people here, obviously they care about their investors, they don't care about the tech, but I think they need to understand the tech to understand why the stock price will follow.
100%. You know, and when I look at companies, it's all about understand their technology, understand their business and what that growth trajectory could look like over the next 3 to 5 years, and lastly pair that with the valuation, right? What's the best company in the world? It's NVIDIA, right? Or some of these other big companies. But personally, do I think that the asymmetric outcome for NVIDIA is the same as maybe one of these small caps like fuel cell? No. That's why I don't own NVIDIA personally, right? So with fuel cell, the opportunity is obviously massive. We laid out the high level opportunity. Currently, fuel cell has 100 megawatts of capacity. They're operating at a 40 megawatt run rate. And
that is their target per year by end of 26, correct?
They have the capacity. They have 100 megawatts of capacity, and they're operating at 40 megawatts currently.
How do we know that? Because I'm asking these skeptical questions because, again, I look at the stock price, and like everything here sounds perfect, but I look at the historic stock price performance, I'm like, this is sus, right?
Yeah, for sure. I mean, so fuel cells been around for a long time. They've been around for 2 decades plus, I believe. And they've historically been a money destroyer, right? To keep the lights on, they had to dilute shareholders. Their tech has never been bad necessarily. Their business model was bad, right? Their margins were crimped because they could never meet full capacity historically. And how they kept the lights on was through dilution, right? And so the stock price looks historically abysmal. There's no other way of cutting it.
Why? Let's highlight this. I think people need to understand why. Like, why was their business so basically? I mean, I don't want to be insulting, but like, why was their business so shit historically? What were the key issues?
I think the key issues were one. I don't think people saw the value in fuel cells. I think it was just nat gas turbines, right? They're cheaper. Fuel cells are expensive, right? And so there was never this urgency, this time to power urgency, right? There was never this bottleneck of sold out companies across the board in power generation. And so we have this just inflecting dynamic that there was never before. Obviously, if a system, an industrial site, for example, wanted to power their site, they just go with nat gas turbines. It's cheaper, right? And so now we're in a different place where we are building more power hungry systems than we ever have before by an order of magnitude. Nat gas turbines are sold out. Bloom Energy is sold out. And the biggest thing is there's a few big things, right? It's time to power, which is a part of that is community acceptance, low emissions, and low noise. And that inflection point for fuel cell is coming now, right? And you could see it in this turnaround. If you hear their CEO talk about the business over the last year or so, he's really focused on, we are only going to show firm, committed orders in our backlog. We are no longer going to show MOUs or whatever else as part of our backlog. We are committed to getting firm orders through the books. We are committed to reaching our capacity goals. We are committed to profitability. And he has been emphasizing this over and over again, which goes to show, I think they understand, right? The shareholders are tired of the same BS. I would be too. Gosh, if I own this stock, this stock 2-3 years ago, I'd be demanding that, right? Burnt out, right? And so we're in this spot where I think it's this beautiful inflection point where the company has an incredible pipeline. They have real data center partners, and they have the liquidity to support expansion because they diluted shareholders about 6 months ago. And so I'm sorry for them, but now they have $380 million in cash, and they have $200 million in debt. So they're at a positive net cash position of $180 million, which would give them a multi-year runway.
What is their current monthly burn?
Like $25-ish million of cash.
So okay, I want to kind of summarize this. You have so much knowledge about this company, but I want to kind of summarize it for the audience that basically the business historically has been shit because, long story short, fuel cells, they didn't have a use case. There was no use case where fuel cells are the best solution. Now, because getting a ton of power on site, you need to have it on site, fast, with minimal or no water usage, which by the way they also check, no pollution, which means no air permit, and fuel cells are perfect now. So now there is demand, which also means they can now produce at their capacity targets, which means they get economies of scale, which will have a huge impact obviously on margins. So they will see margin expansion plus revenue acceleration. And usually when you get that, stocks explode. If you're looking for the next 10x stock, you need to find a stock that is currently misunderstood by the market, that will see revenue accelerate and margins expand at the same time, right? That's the multi-bagger recipe. And ironically for shareholders today, because the company has been so shit in the past, that's why they're diluted. Or like it's kind of chicken egg question. Have they been shit because they diluted, or did they dilute because the business was shit? You can pick your answer, but basically that's why they now have multi-years of runway, and why the stock is so hated and was trading so cheap. So I think we're going to talk about the risks now, but I think this looks like a freaking perfect setup for a 10-bagger. This actually could be a 10-bagger.
I think it's a multi-bagger opportunity, and I've believed that since the beginning of my investment. And I'll lay out a few reasons why I think that this can be a 10x investment or a great investment nonetheless, right? I don't want to put too crazy a price targets, but
if we double, we're all happy.
Exactly, right? And so it's because they have outlined a few things. There's one thing. If they reach their 100 megawatt capacity, they will be adjusted EBITDA positive. That is a huge signal to say, okay, at 100 megawatts, they can reach profitability. Not just gross margin positive, but profitability, right? Adjusted EBITDA profitability. That's key. 2, they are expanding. They've already prepared and outlined their CapEx plans for this year to order all their long lead time equipment, which they've ordered, to expand to 350 megawatts within their existing site. Why are they doing that? Because they've been working with data center partners in the background that we couldn't see. 3, and possibly the most important reason.
You have to double down that. So this is a company that historically has not seen enough demand, has diluted like crazy, and now they're saying you want a 3.5x hour capacity. You got to ask yourself why. There can only be 2 answers. Either they have crazy demand visibility, or they're idiots. There can only be incompetence or insane demand. It can be nothing in between.
Exactly. And they've even said, which I really respect from management, is that they would only do this expansion if demand drove the expansion. So what we're seeing from the T5 data center reveal, right, is that demand is now able to drive that expansion. Not only do they have that deal, but they have an MOU with SDCL for 450 megawatts of data center deployments, and they have an MOU with Inuverse for 100 megawatts of data center deployments in South Korea. We'll get into the South Korean market. They have a huge foothold there. And when we think about the South Korean AI market, they are going to be one of the biggest players in AI factories, whether it be sovereign, enterprise, neoclouds. And they have a foothold there, a serious foothold. All of their major multi-gigawatt deployments, most of their major multi-gigawatt deployments are already in South Korea today. So it's a very exciting opportunity. I'll get to the last point on why I think this is such a asymmetric, and I don't use that word a lot. I don't love to use that word, but such a high upside opportunity, right, is because when you look at why the stock price might be depressed, 1, it was less than $1 billion market cap. A lot of institutions couldn't own it. 2, what institution could speculate and go and look at their investors in the eye and say, we just speculated on this one. Like, we don't have any firm anything, right? So institutions are watching this name. There's no doubt about it. They're watching this name, but they can't really pile in until an order is confirmed with a data center partner.
I know who the first big guy will be that will jump in. It's obviously going to be Leopold.
I think he's already bought.
Yeah.
So if you look at the volume in April, it's nuts. It's nuts.
People don't understand his 30F. That was as of the end of Q1. We have no idea. Like, it's been over a month. It's been almost 2 months since then. He might own Fuel Cell right now, which means he's going to disclose it in the next one. Like, he was early into Bloom. He was
Yep.
he buys everything under the sun. T1 Energy, like he buys freaking Bitcoin miners because he thinks their power assets will re-rate. He will buy Fcel, and when that happens, I don't know, man. The stock's gonna fall.
It's gonna go crazy, yeah. And you know, it's like you look at the volume, and I'm not gonna go crazy on the technicals, but they traded their 3 highest volume days ever in 4 days. 3 of the 4 days were the highest volume day average for the stock. We're talking like, when does that, and no news? How does that happen, right? Somebody's piling in. The options chain is off the hook. I've never seen anything like it in my entire life. Huge whales are positioning in June 18 calls, June 26 calls, out of the money, like deep out of the money on June 18. June 26, the 19 call, the stock was like at 16
we can look
bucks.
at the chart real quick. I mean, look at
It's
the volume.
unbelievable.
Here. So if you look at the volume here, something happened here. Oh, that was earnings. They probably announced something here, I guess.
And a split. I think that was when they split too. So the stock volume started going up.
Okay, and then here, so basically this started happening. When did they announce their new data center solution, the 12.5 blocks? That should have been somewhere
in
here,
March,
right?
in like late March, but it kind of got caught under the weather because the market was tanking.
The market crushed. Okay, and then
yeah, nobody cared about anything in that time.
Yeah, and then when here, but they went down less than other names. For example, Nebius was like bzzz.
Yeah, no.
Okay, then here people started kind of carrying again. Bum, bum, just like this.
Yeah.
Yeah, I mean the volume increase here is crazy. I've never seen volume increase from. What is this? It's
nuts.
Volume
it was
more than
like
doubled.
Nearly 20 million shares a day with those big volume spikes, or 20 million shares a day, which is like 40% of the shares outstanding a day, and there's no news, right? So somebody's piling it.
Can you talk a bit more?
Damn,
I think Leopold is the one with the freaking options, man.
He might be.
Can you talk a bit more about the options chain?
Yeah, the options chain. I mean, so you see the first domino to fall was somebody bought like 20,000 contracts of the July 13 call. Or no, they were 14,000 contracts of the July 13 call. When the stock was trading about 13 or 12 at the time. I was in the name still at this time. So I saw it. I was like, whoa, if this converts to open interest, that is insane. It was about 5% of the notional shares outstanding. It represented about 5% of the notional shares outstanding. So an insane block. And also the premium he paid was about 1% of the entire market cap in just options premium. Then next thing you know, a few days later, June 26th, the June 26th chain, somebody buys the 19 calls when the stock's trading at 15, 16 bucks. They bought it, again, about 1% of the market cap worth of premium and about 4.4 to 5% of the notional share value of all the shares outstanding, like represents that. And they just sweeped it. And most of that's still sitting in open interest. An out of the money June call, we're talking about 1/20th of the market cap in notional shares. Are we like, who the hell's doing that? And then a few days later, on the June 18th chain, somebody buys both the 30 call and the 32 call with about roughly 9K a piece, 9K cons a piece. When the stock was, basically almost 100, these are almost 100% out of the money calls that people are just hammering into. And so you're thinking, like, what's going on, right? What's happening here?
What's going to happen? I mean, there will be
who knows something. Who knows something?
Okay, let's talk about catalysts real quick. What do you think are the catalysts to start this re-rating? Is it just earnings? Is it a PR about a deal being announced? What do you think are like the main catalysts?
Yeah, I think when this data center gets approved and that PR comes out, that's your number one, your first catalyst, because institutions now have legs to stand on, right? When you saw that Bloom re-rate, when did it start? The Oracle deal, right? I was in it. I was in Bloom at the time, and I made a huge mistake of selling. I'm not going to make that same mistake. But that's when those re-rates start. You need firm order news for big institutional players to be able to really buy a stock like this. It's too speculative in their eyes at the moment. And so I think that's your first domino to fall. Next domino to fall is converting these MOUs, right? The 450 megawatt deployment and the 100 megawatt deployments. They're phased, right? These wouldn't be all in one go, and they don't have the capacity to do it all in one go anyways at the moment. But starting to convert those MOUs into orders as well, and getting visibility into maybe, let's just call it 350 megawatts of pipeline or of real firm orders that you can now you could press the gas on expansion and expand to 350 megawatts by 2027. And then you have the visibility to potentially expand to either 500 to a gigawatt of energy by 2028, 2029. I think the visibility is going to be key in the re-rate, because honestly, I mean, you get visibility for the 350 megawatts, this stock's going to be a $7-8 billion company. So you get visibility into the 1 gigawatt, and this stock's this is the $25-50 billion company.
Have we gotten specific guidance for? Let's not go too far out here. I think the growth trajectory is crazy, but let's look at the longest guidance they've given. Have they mentioned? By the way, I listened to a CEO interview that was like 1 month ago, and in this interview, he said their vision is to deploy multiple gigawatts. So he has said that. That is not just us being crazy.
No.
Now he might be over.
It's on the roadmap. 1 gigawatt's on the roadmap. It's real. It's part of their plans. Again, it's all got to be demand driven. Yeah. So as soon as you get visibility, they're pressing the gas. They're not going to be the limiting factor for their clients. They will never be the limiting factor for their clients.
They've given the guidance for 350 megawatts by end of 2027.
So the guidance is this. They are ordering all of their long lead time equipment, and they've done this like in Jan-Feb, right? They're ordering their long lead time equipment. They have $20 to $30 million allocated for long lead time equipment, so that it allows them to scale up to 350 megawatts within their existing Torrington, Connecticut site rapidly, right? And so we're thinking once they get the equipment set up, it's probably 6 months to be able to expand properly. So possibly, again, all demand driven. They're not going to do these expansions unless it's demand driven, but possibly you get to 350 megawatts by the early middle next year, right? If they have demand driven ability to expand capacity again, their plan is to do a 500 megawatt to 1 gigawatt capacity expansion. After that, again, no timelines are really set because it's all about being demand driven. They're not going to continue to burn their shareholders' money, and I think that's respectable. And I think it's probably one of the signals to me that made me comfortable with how management's handling this because of their history, right? You look at their history and you're like, right? Yeah, I'm the same way. Yeah, and I'm the same way, right? Like, I don't want you guys diluting me to hell and burning my money. But if you guys are going to be cost disciplined and go about this the right way, I'm all for it. I'm here. So
350 megawatts is the annual capacity potential they will have by end of next year. So how do you think the market will value the company based on capacity, production potential, based on backlog, based on what do you think is the key metric? For Nebius, for example, I think it's ARR. What do you think is the main metric here?
So there's a few layers here, right? So they have a 1.5 gigawatt pipeline right now. Those are proposals out to the market, legitimate pricing proposals out to the market. 80% of that pipeline is data centers, right? So that is implying that we have over a gigawatt of pipeline, right, for them to have potentially wins on. Now, when we look at the 350 megawatts of capacity, let's assume that they're running at full capacity. Let's just assume that. Right now, their revenue per megawatt is about $2.4-ish million. Bloom's revenue per megawatt is about $3.5 million per megawatt. So there is potential pricing power for that.
That is just product revenue, right? That's just product. That is not including the service. My understanding with the Oracle deal has been that Bloom has been making like $3 million in product sales per megawatt, plus an additional $6 million in service agreements over 10 to 15 years.
That sounds about in line. And so what I've seen is about so if you're making about $2.4 million per megawatt for fuel cell, their service agreements are allowing them to make about $200,000 per megawatt deployed in service revenue. So what is that? 5% per year, right? So 5% of your total revenue, product revenue, is back in service revenue. That is with simple like industrial site or school deployments. We have no idea what their service revenue could look like. I would assume it looks closer to Bloom's model than it looks to their existing model today. So you're going to get product revenue, and then you're going to get sticky, decade-long service revenue on top
with higher
of that,
margins.
With way higher margins. And so I think their business model is going to totally be revamped over the next. It's just going to look quite different, right? The margin picture is going to look quite different. The pricing picture is going to look quite different. But let's assume that they're operating at their 2.4 million per megawatt. At 350 megawatts, that implies about $850 million in revenue.
But it's revenue potential, right? Because that's what they will have by end of year. So they will not make that revenue during that year.
No, yeah. Well, I do think that they'll be at 350 megawatts if things go right and the demand is driving this. They could get to 350 megawatts of capacity before the end of 2027. That's my personal opinion. But let's say their market's forward-looking, and we're thinking about, and I like talking about just the 350 megawatt expansion because I think it's the fairest assessment of this, and it's all within their existing site. If we're thinking about $850 million of revenue potential on the product side, and there's sticky service, high margin service revenue attached to this, you know, I always kind of like, let's cut Bloom's forward price to sales multiple in half, right? Like let's talk about a 7 to 8 times sales multiple, maybe a 6 to 8 times sales multiple.
Yeah,
and
you're looking at 5. I think Bloom would get at least a 10, but let's take a 5.
Yeah, you take a 5 times multiple, and you're looking at a $4.5 billion company, $4 billion company, really.
So that would be a 4.5x from here.
Exactly.
And then let's say, so you take this, let's say you give them half the multiple, which I think you make the case for it because Bloom is more proven, it's bigger, it's 100%. More at scale, it's
they don't
margins,
deserve the same multiple.
But the thing is, so that's the case against them, right? You can say Bloom's tech is more proven, it's more scalable, it's bigger, it's higher margin, but at the same time you can make the opposite argument, be like, yeah, that's exactly why fuel cell has much more growth ahead, because Bloom is not going to 5x revenue year over year, but fuel cell might. Right? And usually the market pays more for growth potential than for profitability. That's just how it is, objectively. The market likes growth.
Yeah,
So,
for sure. And honestly, I mean, you know, fuel cell doesn't, at like current Bloom multiples, fuel cell doesn't deserve it. I'm going to lay out a few things, and I think it's got to be very obvious and understood. Fuel cells tech is not as good as Bloom's, but it is close. And I say this all the time to all of my followers. Fuel cells tech is not as good as Bloom's, but it's close. Their CHP efficiency for fuel cell is 85%. Bloom's CHP efficiency is 90%. It is very close. Both are better than turbines. I want to make that very clear. Both are better than turbines. Low emissions, low noise, actual capacity that could be deployed. And also fuel cell has the optionality of carbon capture, which we will not probably be able to get to in this call, but they have a partnership with ExxonMobil for carbon capture solutions that might be a multi-billion-dollar market on its own.
I think what people need to understand is like the market we're in is basically, I would describe it as beggars can't be choosers. It doesn't matter if Bloom's solution is better. They're sold out. It's not available. So it's like you take fuel cells, this is confusing. You take fuel cell energies, fuel cells, or you have nothing.
That's what I've been saying. Right?
Do you want your data center to go live? Or do you not want to go live? Like, up to you, man. It
is really that simple, right? And I've always said, if Bloom Energy is focused on these multi-gigawatt deployments, right? That's their niche. Who's going to serve the edge, right? Who's going to serve these edge regional data centers? The 50, the 100, the 150, the 250 megawatt data centers. Who's going to serve them? Somebody needs to. And when you think about, again, and I go back to this all the time to power, community acceptance, which means low emissions and low noise, there is no other option that is actually out there with a commercially available product.
Okay, so let's make the most conservative case ever. So what do you say revenue potential be for 2027?
Let's say their exit velocity is 850 million, right? Let's say their exit velocity, their exit run rate is $850 million.
850.
And that's not assuming price increases.
Let's cut it in half.
Yep.
Let's cut it in half for no reason. We're just being insane. We're expecting the stock price performance historically has been bad. Let's just assume extreme incompetence and they will get even less than half, 400 million. Let's also assume they get half of Bloom's multiple. So they don't get a 10x, they get a 5x. That would put them at a $2 billion market cap. Now let's also reduce, so that's like a double from here. Let's on top assume even though they don't need it, they will dilute by 20% because they built a habit doing it. You would be, so if you halve Bloom's valuation, if you assume they reach 50%, which would be a crazy miss, A company that misses 50% of their target is a crazy miss. So we give half the valuation, even though they will have more growth ahead and more re-rating potential. We give half the execution, and we discount even 20% for additional dilution. That's fucking bearish, man. That's a crazy bearish case. That would be an 80% upside.
Yes, it would be. Exactly. And what's funny is also Bloom Energy's 2027, their 2027 price to sales multiples an 18x. So we just put it, we made it 25% of Bloom's multiple when we talk about this, right?
Yeah.
It's unbelievable.
So basically the bear case you got to make here, and I actually think it's a fair one if you look at the historic performance of the stock, is they're incompetent. That's the base case you can make. The only base case you can make is everything they promise is shit. They will not get any deals. It's empty. Basically, you just got to be a hater.
Yeah, I'd say it this way, because their tech is good. Their tech's legit. They've been they historically, before Bloom this year, had deployed more megawatts. I think they deployed over a gigawatt than Bloom did out in the market. So their tech is legit. Their business model sucked.
Yeah, they just didn't make
their
money.
Sales team sucked. So it's not about their technology. It's about their business model, which they, I think, have learned their lesson and have made a big pivot here, and we're seeing it slowly come to realization. Obviously, we're quite early on this still.
Yeah. So okay. So I think honestly, the only two takeaways the two big risks I can give investors, because I don't want to come across as like we're just hyping the shit out of the stuff for no reason. The two things that I would say, if I'm being honest, that the two things that I don't like are, number one, the historic chart just looks like shit. It is what it is, okay? So we have to say that it looks like shit. It looks like it's a shitco. But also I would say it's also the opportunity, because this is why the stock is so cheap now. Because at this point, everybody that invested in them ever has kind of lost all faith and hope, which is why the stock now will either go to zero or it has crazy re-rating potential. Because if this is a turnaround, it's going to be a fucking crazy one. The second thing I will say is that I don't like, the CEO has I have to double check if it's correct, so don't take my word for it, but I think the CEO's equity to salary ratio is 2.5x. So he only has 2.5x the equity that he has in salary. He still gets since he gets a rolling stock-based compensation, he still gets 50, 60, 70% of his compensation in stocks, which is good. It's very clear that if he's a good actor and a rational actor, stock is his main motivation. I'm just going to say that usually I like founders that have 100. I like a founder that's 100 million worth in shares and makes 1 million a year. I like if the equity is so far off that it's clearly their only motivation. But again, it's not like he makes more money. A complete red flag for me would be he literally makes more money from salary and he doesn't get paid in stock, or stock is just irrelevant.
I mean, at the end of the day, Ray, his salary is $500,000. You said his salary is $500,000.
Yeah.
The CEO of a $1 billion company is not living, and he's not looking to live off of $500,000. His motivation is to improve the stock price, and he hasn't sold a share since 2024, like you stated yesterday, right? And so the stock price has been awful, and since 2024, his value of his stock has diminished quite a lot. Yeah. But his incentive is if he wants to ever retire rich, his incentive is to go out there and increase the damn stock price.
Yeah. That's very flagging for investors. He has never sold shares in the open market. He has once made a purchase on the open market, and the only time he ever sold stocks was in pre-planned sales for taxes. So I think that was quite a holistic view of the entire market. I think you did a fantastic job. You're very knowledgeable people who like Caden and your work and everything you've already done for the stock. I think the journey is just beginning, but I think this is a great call, and I will link to your X in the description, or if it's on X, I will just link from my X post to your X, I guess. Tag you, give him a follow, guys, and I think let's do a follow up here once we're up 100% or down.
Let's do it. Let's do it. Hey, any news that comes, any news, any PRs that come out from Fcel, we could do a follow up here. What I found yesterday isn't known, right? It's hidden in some government filing, so we're catching something that probably hasn't hit an institution's desk yet. I mean, I'm just some guy on Twitter, right? So it's big news, it's validating news, it's company defining news. I think this is the inflection point. I bought more. I got in at $9 I bought more yesterday.
I built a crazy big position. I have to,
Yeah.
maybe a good point to disclose. We're obviously both long the stock.
I am.
So we are very biased. But I will say, I bought the position yesterday, and I literally made it the biggest position in my portfolio because I was looking for the next bloom for a while, and I went crazy. And this news, I was like, that's it. That's the only publicly listed company that goes into the same market like Bloom, has re-rating potential, could be a 2, 3, 4, 5, 10x, and is not already trading at like 20x forward sales. It's only Fuel Cell and Bloom. It's only those two.
It's a really unique opportunity. I'm quite excited, and I'm looking forward to the catch up when we're up over 100%.
Cool. Let's do this. Well,
all right. Thank you, Daniel.
Let's cut here. Have a good one. Bye bye.
All right.